Okay, so we're live now on all fronts. Welcome Rita again, Academy members in there. Rich Boy or Rich, I don't know, has asked for the SPY. We'll get onto that, but first I'm going to cover what's on everyone's lips and what's probably most important. So I'm going to go for gold, as they say, pardon the pun. Really interesting and lots to chat about. So I'm happy really to be going on to this first. Of course, as I mentioned, you will have seen if you follow me, I said, do not be surprised. Don't be surprised whatsoever if you get a new high. I said that. I said it's more than possible. You cannot pretend that won't happen. I said it was short at this time here on Friday, but I also said with the caveat, if you're going to trade it short, just leave a little bit left because it's likely that with all these things going on, you'll get a new high. And like I said, if you don't believe me about gold making new highs, all you have to do is zoom out. It has always made a new high. Every single time, eventually, gold makes a new high, okay? So you know there was every chance, there was every opportunity that perhaps gold would break the highs, and it has, okay? And that's why I said, do not sell your house and get short because you think this is the be-all and end-all, all right? And hopefully you didn't. So the reason why you had that spike is because you've got a growing global trend, just a bit of a tongue twister. Again, okay, you've got problems with Yemen and the US, things like that. So people are rounding gold in case things go awfully wrong. They did it with contracts going in and out of the weekend, and that is why you've had this massive spike up. Now, the reason why you've had such harsh rejection, and I know some of my Academy members reshorted into this move, which is fantastic. I told them they should be out for gains, and that should be it. The reason why you had that spike, like I said, harsh market sentiment. But what happens is you get the larger money in the market. You get professional traders, people like myself, who decide that that is just enough. There's too much here, and it's time to short. Now, the thing is, you don't know how high gold is going to go. But the way you work around that is by massively reducing your size. Now, there's tons of people coming in here, so I'm just going to say it once more, and then I'm going to continue. Don't forget to press the boost button. It's right there. I haven't refreshed this stream yet, but do press it. And my free training. If you want to change your trading, you're sick of losing money, you're sick of getting it wrong and having no idea, there is some very harsh reality in there that will help you a lot. It's totally free. Just click the link. My Discord is there. Get me on Twitter, YouTube, Facebook as well. And if you want to contact me, you can. So just back to what I was saying, and I'll leave the chat box open as well. If you want to comment under this on YouTube as well, do feel free to do that. And don't forget to subscribe. So the state of play now, if you had it short above the highs, you left that gap. We said, you know, it's more than possible it will go higher. It's always gone higher over history. Then you can exit those shorts formally. Now, the reason why we DCA, and this is something that is probably critical to this video in this stream. The reason why DCA and why I DCA and why I teach people to hedge as well and without using stop losses is simple. If you'd shorted it here, okay, let's say about there, and you'd shorted it up here, you could exit this form again, a form of short, and that would be your second short, and you get considerable gains on that fall. Okay, and you could also exit former short one for a tiny loss, okay, or even no loss. Now, what happens is the profit you took from the second short, if it gets rid of the first short's loss, and you'll be in gains. So that's why it's so much better to completely drop your size. Don't sell the farm. Don't, like I said on Friday, don't pretend this can't go higher. Because you can see now it has. It absolutely has. And it is rip-roared higher. Okay? So you would exit short 2, you would exit short 1, and you would therefore be in overall DCA gains. So instead of using a stop loss and closing out, you can just massively reduce your size so that your equity completely, you know, dwarfs what you're at risk. And then you can trade various assets. Now, the reason why I teach people to hedge as well is because you've now got a chance, and as I said this morning to lots of people, to take it long. You had a chance to get long here because you fell back to what was weekly or higher time frame daily support. Okay? If I just move this slightly, you can see what happened quite clearly. If I draw a line to the low on this candle wick today, okay, you can see you come right back into these areas, right back into these tips, okay, and that is because those new areas that were broken become support, okay. So that's a really key principle in markets. Resistance becomes support. And if you're wondering why, it's just how markets work. It's because when you can see rejection at one area, that serves as a new rejection zone for new entries. So that's why I called it long there, very lightly. You can check my updated posts. So I think what will happen at this current point is, unless you see anything really, really change in market news, I wouldn't be shocked if today you get just a little drip feed back up to here, okay, or maybe up to 2090, in line with this new fall and reduced demand. And I would reshort there. I would also consider exiting those longs you took. So I don't think this is going to go very quickly. I don't think there's enough sentiment at the moment. I think it's sort of cooled off. I think they've said, okay, well, now we've realized that perhaps it's not as bad as it was. That's why you had a fall from here so quickly. Now, this rise is like the Grim Reaper. It's like the Grim Reaper of stop losses, because it would have destroyed so many people. And again, that is why I don't use stop losses. I know it sounds upsetting for some. They don't know anything different. But everyone in my academy knows if you just change your risk plans, it's more than feasible, because you can be long now. You could be buying this early support and you would be in profit. And you would have taken 2 gains on the short side, 1 on the long already. And all that money sits there as a pool to evade any more growing drawdown and loss. Okay, so my bias really, if you do find continued growing tensions across that area of the world, like I said with Yemen, the news, you can go and read it. It's war type stuff, unfortunately. If that persists, you may find gold higher, but I don't think today necessarily that's going to be the case. I don't think it's going to zoom up there, but I think you'll probably creep along around here, and then the market will creep back like that. And I think you'll get something like this, really, really slow, but I would consider reshorting there. But any new entries, in any case, just do it lightly, okay? Because you do have that dangerous market sentiment. It could be completely the case that instead of it dawdling, you just go back up, okay? I would say it's slightly more unlikely than likely, but it doesn't mean it can't happen. And there's a lot of people who use a rhetoric in the trading world, and they say, oh, it can or can't happen. Now, there is nothing like that, really. Unless you're talking about something really extreme, there is no can and can't. So, for example, if someone said, now, oh, I can't get back to here, okay, $2,000, that is just a false statement. Even if you think it's likely or unlikely, it doesn't matter, because can and can't are definitive words in which you're asserting that something will not be the case, or it will absolutely be the case. But that is never the case, okay? It is never the case that things can or can't happen in markets. Everything is on the table. Now, you can see clearly there is rejection here. So the first note to take is that people don't want this price, or investors at the moment are happy to liquidate at this point. So any move back up there at this point, any move back into where people literally just closed their longs and got short, is going to be a reshort entry. Because again, you're like a detective. You've got to understand that you can physically see people have sold their assets here. Their holdings in gold have been liquidated. You can see that. That's a non-negotiable fact. It's there. So often what happens is, once you have this massive impulse, okay, you get these massive rips higher up to this point from down here. Once that occurs, you often get a following massive fall back, because the hype's over. Everyone's taken their money. All the professional traders, the higher volume has taken their gains and flipped short to liquidate everyone else who's got long and has a stop loss as well for their shorts. So that's why people call them market maker stocks, because these were great prices for professionals and people who know what they're doing to get short, which is why it fell, okay? And the reason why you're bouncing now, like I said, is because you're coming to very early support, hence why I mentioned to take it long. And I think you'll probably trickle back up. Like I said, I think it's waning. I think the sort of sentiment around it and all the volatility is waning a bit because it's been digested. It's come in. So if you're expecting something absolutely crazy, I would say it's slightly less likely. But I wouldn't be shocked if you get up here at least 28.2. I would kill off your longs at that point, or I would just lock in gains now. You've had a good hedge long. You came right back to your earliest MAs, affirming your strong uptrend as you've seen before. So yeah, reshorts higher into what is now rejection areas, key resistance. If you're slightly more risk averse and perhaps you're a little bit less confident, I would say it would be more ideal there. But I wouldn't touch it if you've got no risk plans. I say this time and time again. You will lose more money trying to trade on your own than paying someone like me to give you the tools to do it. I say that all the time. So if you're going to trade on your own, just know that, because that is why on most brokers it says such a huge proportion of people lose their money. Because it's true. They don't have a clue what they're doing. They put their stop losses here and they get absolutely wasted. And the Grim Reaper comes along and takes all their money. I don't know if there's a Grim Reaper one here. What could we have, I wonder? What have we got? Maybe this will be closest. Comes along and takes your money on your stop loss. All right? He goes up there and he takes it. So don't get caught in that. All right? That is classic. You should never be buying up here either. But if you're trading with stops, this is again the problem, okay? And this is why I don't use them as well. Because how do you specifically know what is going to be the limit for gold to rise? I mean, no matter where you had your stop loss, no matter where it was, you would have been taken out. So that's why I don't use them. I drop my size significantly. I diversify my portfolio. I hedge where necessary, and it allows me to trade long term. That is the unique part of my method. Like I said, if you want to get that, just go under the stream or video there. It's right there.